The one general fact that I'll give you is that many private equity firms say that they have partners and organizations that are operators. Alex, with all due respect, that's not true. Well, okay, if you think you can get a price increase, what is the other side of that price increase? Think about that. Boy, I really want to get a high-paying job, but I don't want to go to work.
Welcome back to the Rule Selection Private Equity Podcast. On the podcast today is Geoff Lurie, Managing Partner, Traub Capital Partners, a private equity firm in the US investing in the consumer sector. Geoff is an operator turned PE investor and shares his unique insight on how PE firms and operators can work together for better returns. Quick message before we jump into the podcast. I appreciate the market has been really tough on a lot of private equity firms. We're hearing lots of scaling back. We're hearing lots of positive messages. But we are hearing about firms struggling. Either they've got capital to deploy or they're really struggling with regards to fundraising at the moment. There's green shoots in the market. We're starting to see more hiring for private equity investors, usually a sign that people are beginning to grow. We're starting to see more deals or people coming to us on the portfolio side and saying, we need a search. We've got this acquisition pending. So we are starting to hopefully move into spring and outside of winter. But let's jump into this podcast with Geoff. So Geoff, if you could share a brief insight into you, please.
Certainly. Hi. Well, thank you very much for having me on. I am obviously not born and bred in Brooklyn, New York. I originally came from South Africa. I'm educated in actually as a chartered accountant, CPA, although I haven't practiced that in 50-odd years. I'm a person that focuses on operations. I have been a CEO of many companies, initially before we started the private equity firm, as a consultant in companies that needed some change. Either they were troubled or they were growing, or so forth. So I focus primarily on operations in companies.
And what is one mistake that you see private equity firms or their portfolio companies making, and what would you suggest to correct it?
Well, it all depends on what the private equity firm focuses on. If you're focusing on large companies with what I call shiny objects, where everything is perfect and runs by itself, you've got to focus on whether the management team is being as effective as they can. In the areas that we participate, which is generally entrepreneurially driven companies that get to a particular point, the one mistake that I think private equity firms make is assuming that the entrepreneur has forgotten how to be an entrepreneur and now all of a sudden is questioning that he's turning into a reporting company as opposed to running his or her business. The problem that the portfolio companies have is somehow educating and bolstering that management team. Now, from the management team's point of view, the entrepreneurs don't really know how to report to anybody else. Generally, these are companies that are either family-owned or grown by the entrepreneur prior to selling to a private equity firm, and all of a sudden they have people that they have to report to. So that's the one mistake that I see that they make in that they don't really understand what it's like working with a private equity firm. So I guess the point is setting expectations right from the beginning, from the PE firm to the potential portco, in terms of how it's going to work, what's required, how we're going to structure the relationship between the private equity firm and the management. That is key from the outset.
How do you balance that either that transition or that focus? You mentioned there the balance of data information and being a reporting company. How do you get that balance right?
Well, one of the things that we've done, okay, and that we get better at it every day is, right up front, we present our portfolio companies with a booklet that says, this is what we expect from you. This is how we operate. And generally, it's broken down into what I'll call three phases. The first phase is what I call the first 100 days. This is what's going to happen in the first 100 days in terms of setting up the reporting structure, setting up portcos need to provide, making sure that the portcos have adequate management, generally in finance, in the financial departments. So there's the first 100 days, which establishes the ground rules. And the next 650 days is operating the companies. And then the last 120 or 130 days before, or 160 days before we sell the company is positioning that company for an exit. So it's really those three phases. There's what I'll call a 4 to 6 month initial phase, a 3 to 4 year middle phase, and a 4 to 6 month exit phase.
Perfect. So you've got a bit of a playbook. That
we have a.
Here's what it looks like, and here's what we want.
Right, and here's how we show up. Here's how we expect the relationship to be between management and the PE company. It generally, and I think even it doesn't matter what PE company, whether you're a private equity firm focusing on larger companies or smaller, it's the same thing. You have a management structure where you have, the hierarchical management structure. The most important person in the PE/Portco relationship is the CFO. And that's why you'll see a lot of private equity firms, including people like ourselves, that more often than not, we will place the CFO in the portfolio company, because that CFO has a dual responsibility. One is to be the CFO of the company in the traditional sense, and the second one is to be a liaison between the company and the private equity firm in terms of the financials and the financial structure of the company.
It's interesting you mentioned the CFO. So we find that the chief financial officer position for private equity firms in the US is the most replaced position in any business. So we do all C-suite searches, and most of them will swap the chief financial officer out. What's your take on when you're looking to appoint these and you being heavily involved in that? What's your take on what you're looking for when you're looking for a good chief financial officer that will come in and play that dual role between Portco CFO, but also liaison between yourselves and the PE firm?
The major difference is that private equity by definition is an institution that employs leverage. So you've got lending relationships with covenants and et cetera, et cetera. And particularly in an entrepreneurially driven company, you don't have that degree of leverage. So the first thing that I need from a CFO is having had private equity experience, or alternatively significant experience in dealing with lenders, to establish the ground rules, and B, watch out for the warning signals. Because the plans are never wrong. It's just that the real world turns out to be different. In today's world, with everything that you read about, particularly in the consumer areas, which is the ones that we focus on, the consumer's nervous. I don't care what. Every day I get onto the internet and I look at the business news, and you see that in the beauty industry, sales are slow. If you see that in the grocery industry, sales are slow. If you see that in the apparel industry, sales are slow. It's because the consumer is concerned not so much about the global economy, but about the economy that exists every day when they wake up. It's an attitude between their ears, and that causes the best laid plans of mice and men to be changed. And a CFO is vitally important in seeing the early warning signals, taking the corrective action, or putting in place the triggers that will trigger some kind of corrective action before it needs correcting.
I'm interested because you, just before we went and hit live, you were just explaining to me how your firm works, Geoff, with your three founders and more too we've had on the podcast previously, and your play in that. You position to me that you're the operator, you're the ex-chief executive that comes in, that plays a lot with the portfolio companies. What have you instilled in Traub that maybe a firm that doesn't have a person of your nature at the partner and at the top of the business that you feel is important with that operator type of mindset within a private equity firm, obviously investing in companies where you have obviously operators, chief execs, everything in now? What have you implemented from that?
Well, I don't want to sound like we're the only private equity firm that knows what they're doing. There are a lot of successful private equity firms around, many of them equally or more successful than we are. But the one general fact that I'll give you is that many private equity firms say that they have partners and organizations that are operators. Alex, with all due respect, that's not true. You have people that at one point or another were either operators, or they sat a long, long time ago, or they sat on a board, or they evaluated, from a consultative point of view, but they haven't actually had to put their pants on and get in there every single day and run the company. And understand that, yesterday was and I'm talking, we're in the consumer business, but it doesn't matter. Yesterday was a major rainstorm and our plant is shut down because it was flooded out and we've lost 3 days of production. I know how to do that. I've run companies with plants. Okay. I don't know how many private equity firms have somebody that didn't grow up in private equity or come from the investment banker route, but came from the operating route, the people that actually sat in the seat. And so what I believe that we bring that many private equity firms don't bring is that experience. And I'll give you a little anecdote on that, and you can use this any way you want. I don't know how many times I've sat across the desk, even in our firm, where these very, very bright young people that have got these computers and they've got all of these spreadsheets, and they're looking at the numbers that are presented by a prospective opportunity, and they're looking at the gross margin, and they're saying, well, if we can get the gross margin up 2 bips, this is the effect that it will have on the income statement, and this is the effect that it will have on the price that we could pay for that company and to achieve the adequate returns that we're looking for, because, those are the guiding lights. And I turn to these young people and I say, gee, that's great. So tell me exactly what you do to get those 2 bips. And there's generally silence on the other end of the table. Okay? Because there's a big difference between programming the computers and programming the models, than saying, okay, if this is what I want to achieve, what exactly with a particular company that I'm looking at do I have to do to get that change? And what are the difficulties that arise? And what are the obstacles that I'm likely to face while getting there? And what are the potential upsides and the potential downsides? Based on years and years and years of experience.
So what advice would you give then? We've got a lot of private equity investors, and a ton of them listen, some of them managing partners, principals, right up and down the chain. What advice would you give to them to get a better understanding, rather than just going, I believe if we increase our price, we will get more revenue, more profit, and therefore a bigger EBITDA, exit multiple or IRR or whatever, Mike. How do they begin to get what you have of that knowledge, Geoff, because you've been in that seat? They're not going to jump out. Well, some of them might, and some of them have, but not going to, in the most part, going to jump out and start being a CEO. So how do they kind of get that kind of level of understanding and exposure, so when they come to the table with the ideas, they don't have someone like you with the big pause of how you're going to do it?
No, I want to repeat again, okay, for whoever's going to listen to this podcast, I don't have every answer, and I'm not saying that we're the only firm that can do that, or that private equity firms can't do that. What I'm telling you that from our point of view, this is how we would approach that. The first thing that I do is to I've been around a while, okay, is to tell people, particularly, I was going to say particularly in dealing with the consumer world, but it really applies to every company, and that is using common sense. if you use common sense and you always look at the situation from the other side. Okay, for example, you talked about whether we think we can get a price increase. Well, okay, if you think you can get a price increase, what does the other side of that price increase think about that? Whether the other side is the customer that you're selling it to, or the ultimate customer, who is the consumer. How are they likely to react to that? Okay, given what's happening in their worlds. And if you think about it as common sense, and I say again, we focus on consumer companies. I always tell the young people that are working with us when they're evaluating anything, don't think like a private equity guy. Don't think like a chief accountant. Don't think like an engineer. Think like a consumer. Because as a consumer, you know what you like and what you don't like. You know when you walk into a restaurant whether you like it or not, what makes you happy and what makes you unhappy. You know when you walk into a retail store what you like. You like the merchandise. You don't like the people that work there. You don't like the look of the store. There's not enough variety. Or there is too much variety. Or in some cases, too much variety. I can never find anything. There's just too much to look at. Et cetera, et cetera. So if you think about it as a consumer, and if you always think about it from the other side of whatever strategy you're implementing, you're likely to come up with a strategy that's acceptable to everybody in the equation.
Not only am I the host of the Private Equity Podcast, but I'm also the founder and managing partner of Raw Selection. Raw Selection is a private equity specialist executive search firm with two divisions, one that focuses on portfolio, C-suite executive hires, and one that focuses on private equity direct hires via back office and investment deal professionals, operating across Europe and North America. A unique offering of our service is that we offer a full money-back guarantee on all upfront deposits. We typically take around $10,000 as an upfront deposit to commence a search process. The remainder is then on completion, but that upfront deposit is completely refundable. If you're not happy with our service, we'll refund that upfront deposit, no questions asked.
I was going to say, on the flip side, what do you now know that you've been working in a private equity firm that you wish you knew when you were an operator?
I know for sure that the temptation to take on more debt than you should, even if it's available, has to be resisted. The fact that you can borrow more money and someone's prepared to loan you more money doesn't mean you should take more money. Okay? And the second thing is, never look for capital for growth of the business, and never look to short-term borrowings for that. Never. Using short-term working capital borrowings for growth purposes is cancer. It's going to catch up with you. You need growth capital and you need working capital. And working capital is stuff that goes in and out like a revolver every year. You use it. Once it's used, you replace it. You borrow again, you replace it. If you were running a retail store, for example, a retail chain, don't use the working capital line to go build the next store, because you're going to hurt yourself, if you do that. So, if I were, if prior to getting into private equity, I guess I always knew that. But when I see some of the problems that occur with private equity companies that take on too much debt in their portfolio companies, or don't leave enough of a cushion for unforeseen bad circumstances, that's what I if I was in an entrepreneur before I went to PE, if I knew then what I know now, I probably would have, changed some of the decisions I made.
Thank you for sharing that. So just looking at the work that you do as you're the operator guy within the private equity firm, you mentioned the playbook that you have with regards to reporting. What are some of the other playbooks that you put into play when you have a new portfolio company? One of them's your reporting process. Here's what we expect. What are the other things that you look to immediately fix from transition from likely a non-PE backed business into a first-time private equity backed business?
Well, A couple of things, okay? When you, as a private equity firm, when you acquire a company, the first thing that you have to realize is that the management in that company, and I'm really talking about maybe the second or third level management, not necessarily the ELT, the leadership team. They understand that this is a private equity firm. They're not investors for life. They're investors for a period of time, 5 to 6 years. And so therefore, they wonder what's going to happen, when they sell it, who they're going to sell it to, what's the next guy going to look like? Is this somewhere that I want to work at? So one of the things that private equity firms do, and we do exactly the same thing, is we reserve a not insubstantial amount of the equity of the company for management. And not only for senior management, we will go down 2 and 3 levels of management as part of that management pool. And so now what's happening is that everybody's got a stake in the operation, so that ultimately when the company is sold one day, they will make some more money than they thought they were going to make. It's not a regular job anymore. And in some cases, particularly with people, in the middle of the organization chart, the amount of money that they could make from the management incentive equity could be life-changing. This could be enough money to pay off their mortgage. We're not talking about the CEO that might walk away with millions. You're talking about, somebody working in the in the accounting department or in the marketing department or in the manufacturing in the plant that'll walk away with $400,000 or $500,000 that they never thought they were going to get because they were just regular working people, and it's enough to pay off their mortgage. What that leads to, you get them excited. What that leads to is how are they going to think about management? Do they think about it in the personal sense? Boy, this is going to be good for me. What we try to instill, and we have this in our little booklet that we put out, every two is that here's the mantra. It's enterprise, team, individual. Decisions have to be made for the best, in the best interest of the enterprise first, before you think about it to yourself. So enterprise, and then how can I assist the team? And then if the enterprise succeeds and if the team succeeds, the individual succeeds too. Okay? I happen to be going through a situation right now where we're looking to replace a senior level management in one of our portfolio companies. And when I go through the interview process and interview potential candidates, you listen to the questions that they ask you, particularly, unfortunately, the younger people today who, are me first, is what's in it for me? When I hear that, I turn off the signal. Because what's in it for me should not be the first question they ask, or the first intimation that they make, or the first decision they make. How am I going to benefit from this? Of course, you need that needs to be in your equation, but you need to understand where's the company going? What's in the best interest of the company? What should the company be thinking about? And if so, do I want to be a part of this team? And if I want to be a part of this team, then how am I going to benefit? I have no problem with somebody asking what the management incentive program looks like, but not the first question that comes out of their mouth. So, those are the disciplines that we put in place, and the things that we like to do in evaluating the company you're getting into, and the management team that you're going to rely on to help grow this company.
Yeah, I like that. It's a bit like when people ask the first question, or one of the early questions is, what's the holiday vacation package? And you're like, no.
I went to Alex, you can probably cut this out of the when you do your editing, but I was sitting in a restaurant alone, sitting at the bar counter a few months ago, minding my own business, having dinner, and next to me was or 2 bar stools away was a young lady talking to a guy, and she said, "Boy, I really want to get a high-paying job, but I don't want to go to work." What she meant was, I don't want to go to the office, right? And I couldn't resist. I turned to her and I said, "Excuse me, could you just repeat what you just said? I'm sorry to overhear your conversation. You want a high-paying job, but you don't want to go to the office." unfortunately, that's part of the stuff that we have to deal with in today's world.
I agree with you. There's far too much of that kind of mantra around, you got to do the work, and you've got to build yourself to certainly to achieve it. So Raw Selection is built on completing the difficult searches, the searches that the big Shrek firms have struggled with, and we've built our track record on our basis on working with lower and middle market private equity firms across Europe and North America on the searches for the firm and for the portfolio companies that other firms have been incapable of completing. So if you're exploring a new opportunity, either within a private equity firm or a portfolio C-suite executive in a peer-backed setting, please do reach out to us at Raw Selection. We'd love to support you in securing your next role within the private equity industry. Alongside the podcast, we're passionate about giving back to the industry and giving people information that they can run and utilize. One thing we do regularly every year is we run salary reports on accurate live data of people that we've interviewed and people that have shared their information with us. So if you're looking to compare with current compensation or your compensation for your next hire in your private equity firm or portfolio company, then please check out our YouTube channel and see the playlist of salary surveys. Just think about your transition. So you obviously transferred from operator to private equity investor. What was the desire around that? Why do that?
I'm not gonna answer it from the point of view that I just argued a few minutes ago. But from a personal point of view, I spent a career helping to build companies. Okay, either growth companies that I took to a point where a private equity firm would come in and buy it. That, by the way, is how we started our firm. I don't know if Morty told you that in his podcast, but essentially Morty and myself were partners in a consulting firm with a gentleman by the name of Marvin Traub. And Marvin Traub was the preeminent retailer of the 70s, 80s, and early 90s. Marvin was a lot older than me, and certainly a lot older than Morty. And we would help companies grow. Sometimes if they were troubled, we would fix them. Other times if they were growth companies, we'd put in place the disciplines to grow it, and then all of a sudden a private equity firm came and bought it. So what we said to ourselves was, hey, why don't we go out and, we know more about these companies than anybody. Why don't we go raise a fund and build them ourselves? So essentially it was building the balance sheet, the personal balance sheet, rather than the personal income statement. That's what, that's why we went to it. All the work that I was doing right now, I was doing for somebody else. We might as well do it for ourselves.
Makes sense. What do you think, what advice would you give to, you're obviously interviewing executives now, the process you're running through at the moment. What advice would you be giving to chief executives, CFOs, COOs, private equity-backed companies on what they should be doing more of to, whether it's drive value creation, whether it's improve the business, whether it's improve culture, everything evidently focuses around value creation, but it doesn't have to be just, here's a process to improve EBITDA. What do you think that they should be doing more of?
Okay. I'm going to take the mantra that I told you before about enterprise, team, individual, and I'm going to amend it ever so slightly from enterprise, team, individual, to enterprise, corporation, ultimate success. Okay. So the first thing that I want a CEO to think about is, what's in the best interest of growing this company? What do we have to do to grow the company we have? The business we have. What is the best we can do to do that? Then I want them to look at and say, well, what is it that we could possibly do to enhance the business we have? Whether that be adding product lines, whether that be adding other companies that could benefit where 1 and 1 equals 2, in other words, add-ons. In order to grow the enterprise value of the company. And then lastly, understand that as a private equity firm, we want to be able to sell the company down the road to somebody else at a greater multiple than what we bought it at, and with a greater EBITDA than what we walked in the door. So it's grow the company and grow the company in a way that is not only the dollar profitability, but the amount of goodwill, which is multiples, okay, that somebody in the future might want to pay for it, and understand that the best time to do that, the best time to sell the company is on the way up, not at the top. You need to leave some room for the next guy. So what I want the CEO to think about is not how much money I'm going to make when we sell this company. That's the individual turning my mantra upside down. It's what's in the best interest of the company. How can we grow that company to a point? How can I assemble a team to do that? And what do I have to do to this company, both organically and strategically, to position it at the end of the day to be able to sell it at a greater price than what we bought at, and then ultimately everybody wins. So, the CEO, in order to do that though, Alex, the CEO has to be in once again, it all depends on where in the consumer world you're buying it. Are you buying it at the lower middle market? Are you buying it in an entrepreneurially driven company? Or are you buying it in one where you have people who manage people who manage people who manage people who do the work? Which a lot of big companies do that, by the time you get through that structure. In an entrepreneurially driven company, and generally in a family-owned, what was a family-owned company, you don't have layers of management. You have people who do the work. So what you need to do is to in order for the CEO to do the second and third piece of what we were talking about, he has to have a structure that allows the CEO to be involved in the operations, but not to such a degree that they can't think of anything for the future. I hope that communicates.
It does. So anybody watching this on YouTube, Geoff, regards to YouTube, Geoff has got, you mentioned a lot of experience, Geoff. What I admire about this conversation is the amount of passion that you have, right? And, what I say, you're watching YouTube, hands are everywhere, highly energetic, and that's obviously coming across also on audio. What I'm interested to know is what is that drive? Why are you still so passionate after such a long time operating businesses, now running private equity firm? Where does that drive and passion and energy, and why is it still there? Where does it come from?
I guess I'm a frustrated university professor.
I've never heard that one before. Go on, you go.
No, let me define that, okay? I enjoy mentoring people. I enjoy mentoring young people. I enjoy imparting the knowledge that I've learned and gained after all these years of experience to younger people coming up the management chain. Okay, I get a lot of pleasure out of that. If you talk to my wife or my friends, my wife would say, all you ever think about is two things. Okay, you think about your work, and you think about your golf game. Okay, and I say, yeah, I got to think about the work because the golf game sucks. But I don't know. It's just built into my personality. I like people. I like to mentor people. I like to impart the knowledge that I've gained over these years, or the experience that I've had. I use this expression every single day in my work, and say, guys, we may be living in the era of AI, and social media, and if I tell you that there's nothing new in this world, nothing. It's the old stuff comes back in a different form. The disciplines, the tenets that make things work or not work are exactly the same. They're the same from the days of my grandfather, and they'll be the same for the days of my grandchildren. It's just how it manifests itself. And so, I go back to my example of the young people that are sitting there with their computers and their Excel spreadsheets and their models, figuring out exactly what this company should look like if we get here. And I'm saying that's admirable and that's wonderful. That's great. Okay. But what I hope to bring to you is the knowledge and the experience of how to do that, how to achieve that. And how you achieve that is by employing the disciplines that have been in existence for 100 years.
Geoff, anybody wishes to reach out to you, how best do they do so, please?
They reach out to me via LinkedIn or via my direct email address, which I'm happy to provide if you want, or my phone number, or our website, Traub Capital Partners. We put out our own podcasts, our own versions of today's conversation on various topics. We've been doing that for a long time, and we get quite a good response from that.
Yeah, well, we'll put all the notes, and we'll put a note to the podcast as well on there as too. Well, thank you very much for joining us, Geoff. You've given us a unique insight into private equity from an operator's landscape into the private equity investing world, and it's been incredibly valuable. So thank you very much for that.
Thank you, and I've enjoyed it very much. Nice to meet you, Alex.
You too. And for all of our listeners, thank you very much for yet again tuning into the Private Equity Podcast. If you haven't done so already, please do subscribe. Be notified the next one, which comes out every single week. But till the next time, keep smashing it, and thank you very much for listening.